Hey traders, Desmond here. Welcome back to the IronFX Trading Podcast. Today we're tackling something that sounds simple, but it's a real edge once you understand it. The 3 Forex trading sessions and when volatility and opportunity actually peak. Because yes, Forex runs 24 hours a day, 5 days a week, but it does not move with the same energy the whole time. Here's the analogy. Think of the market like a big international airport running 3 main shifts. The first shift is calm and orderly, the second shift is rush hour, the third shift is when the biggest announcements hit the speakers and everyone starts moving at once. Same market, different behavior, and if you trade the wrong shift for your personality and strategy, it feels like the market is against you. When really, you're just showing up at the wrong time. So let's break it down. First, the Asian session. This is typically led by Tokyo, with Sydney opening earlier. This is the early shift of the Forex day. What does it feel like? It's often more range-bound, more controlled, more selective. That's why newer traders sometimes love it and sometimes hate it, right? If you're the kind of trader who needs big candles to feel like something is happening, the Asian session can feel like watching paint dry. But if you like clean levels, mean reversion, and tight risk, the Asian session can be a gift. Now here's the key. In the Asian session, pairs connected to the Japanese yen and the Australian dollar can be more active than, say, euro dollar. Not always, but often, dollar yen can show clearer movement when Japan-related flows matter. Aussie dollar can respond when Asia-Pacific risk sentiment kicks in. Practical takeaway for the Asian session: 1. Think ranges first, breakout second. If price is bouncing between obvious support and resistance, you don't need to force a trend trade. Trade the edges or wait for a clean break with confirmation. 2. Be extra careful with stop placement. In quieter liquidity, price can wiggle around levels. Tag your stop, then drift back into the range. That's not the market hunting you personally. That's just thin liquidity and noise. 3. If you're trading a breakout in Asia, you want a reason, a clear catalyst, a clean level, and ideally momentum that is not fading after the first push, right? Because the Asian session is famous for fake energy that dies out. The move looks like a coiled spring, and then it turns out the spring was barely loaded. Next, the London session. This is the rush hour shift, right? London is one of the biggest hubs for Forex activity, and when London comes in, the market often wakes up. Here's the thing. If the Asian session is a quiet street at dawn, the London Open is the moment the city starts driving to work all at once. Liquidity ramps up, spreads often tighten, price starts to respect levels more cleanly, but it can also move faster. This is where a lot of the day's trend can form. So what's the opportunity? Breakouts, continuation moves, and clean momentum setups. Let me give you a practical example. Imagine euro-dollar spent the Asian session drifting sideways in a tight range. London opens and suddenly there's real participation. Price breaks above the range, retests the top, prints a strong rejection candle, and then pushes. Right? That retest is the difference between jumping on a speeding train blindly and stepping onto the platform at the right moment. Now, the trap in the London session is also obvious. London can fake you out. You'll see a sharp spike through a level. Everyone thinks it's the breakout, and then price snaps back, right? And that's a classic liquidity trap, right? So your protection is confirmation, not price alone. Right? You're looking for clues like follow through, structure, and how price, right, behaves after the breakout. Does it hold? Does it retest? Does it reject? If it breaks and instantly dies, that's not strength. That's a trap. Practical takeaway for London: 1. Have your levels marked before London opens. If you're drawing support and resistance while price is accelerating, you're reacting, not trading. 2. Consider waiting for the first burst to settle. The first minutes can be messy. Sometimes the best trade is the second move, not the first one. 3. Respect your risk. Because volatility is higher, your stop needs to make sense for the session. If you use an Asian session stop in London, you may get clipped just because candles are bigger. Now, the New York session. This is the shift where the United States data, headlines, and risk sentiment can take over. New York is typically the second most liquid session, right? And the early part of New York is where it gets interesting because New York overlaps with London, and that overlap is the main event, right? This is the time window many traders point to as the most liquid, most active part of the Forex day. IG +2, OANDA +2. So what does that mean for you? It means the market can trend strongly, break levels with conviction, and move far enough to justify wider targets. It also means you can get whipsawed if you're sloppy, because this is when major economic releases often hit. A single surprise number can rip price through multiple levels like they weren't even there. Right? This is why the first part of New York can feel like the market is either printing money, or printing pain. Right? So how do you trade it? First, know whether you are trading news or trading after news. Right? If you're not a news trader, don't pretend you are. You can simply wait for the initial reaction, then trade the second move when volatility comes and structure returns. Second, pick instruments that make sense for that window. Dollar pairs can move heavily when United States data hits. Gold can also get very active when risk sentiment swings, yields shift, or the dollar moves sharply. Let me give you a practical example with gold. Gold drifts in a range during Asia, then London starts pushing it, New York comes in, a big United States release hits, gold spikes, then pulls back. If you chase the spike, you're buying right the top of panic, right? But if you wait and you see gold pull back to a prior breakout level and hold, that's where the trade becomes structured. Risk becomes definable, reward becomes realistic. And here's a detail most educators won't tell you. There's a daily rollover time where spreads can widen and pricing can get weird for a short window, especially if liquidity is thinner. Many brokers reference 5 right in the evening New York time as the end of day rollover point for Forex positions. Forex plus 1, you don't need to be scared of it, you just need to be aware. If your stop is tight and you're holding through rollover, you can get clipped by spread expansion. Right? That's not strategy failure, that's a cost of the market's plumbing. So how do you put all 3 sessions together without overcomplicating it? Here's my hot take. Good traders don't pick a best session. No, they pick the session that matches their edge and they build a routine around it. Like if you love range trading and you hate chaos, right? The Asian session can be your home, or you're fishing in a calmer pond, right? If you love momentum and structure, London is your best friend, right? That's where the coiled spring actually releases. All right. If you love volatility, bigger targets, and you can handle speed, the London and New York overlap is where opportunity peaks. Right. That's the market at full volume. Right. Babypips.com +1. Now let's make this practical. Before you trade, ask yourself 3 questions. 1, what session am I in right now, and what is the normal behavior for this window? 2, am I trading a pair that actually moves in this session? Or am I forcing a trade out of boredom? 3, what is my plan if volatility spikes? Do I widen stops, reduce position size, or simply wait? Because the real secret is not finding more trades, it's filtering for the trades that make sense right now. Timing is everything. And finally, trader personality. If you're newer, pick one window and master it. Do not try to trade all day, right? That's how you burn out and overtrade. Choose a session where you can consistently show up, analyze, and execute without rushing. Then build a simple playbook. One setup you understand, one risk rule you never break, one routine you repeat. And as you get better, you can expand into other sessions and overlaps them, but you earn that expansion. You don't wing it. All right, quick recap. Asian session tends to be calmer and more range-oriented. London session is where momentum and clean moves often start, all right? New York session brings major headlines, and the overlap with London is where volatility and liquidity can peak. If you match your strategy to the session, the market feels smoother. If you fight the session, the market feels random. That's the difference. Thanks for listening. If you want more practical trading breakdowns like this, follow the IronFX channel and stay tuned for the next episode.